Yep.
Welcome to the Loveland Report and the Lone Ranger Radio Show. My name is Bruce Woodburn. I am the Lone Ranger alongside Cleve Loveland, master of real estate here in Central Florida. Been selling real estate since 1776. Longest running real estate informative radio show in the history of the planet. And what an honor it is to be alongside such a veteran in real estate. And I got to tell you something, all joking aside, Cleve is the guy. You know, I work with a lot of real estate agents out there, and I'm going to tell you something. If they could gain the skills that Cleve has, then you would see a lot more production in real estate. But most real estate agents don't even close in a year what Cleve closes typically in a month. So if you're looking for a great real estate agent of a team of buyer's agents that represent you as a buyer, or if you want an expert to help you get your house positioned to sell for the most amount of money in the least amount of time, call Cleve and his team at 407-352-8118. That's 407-352-8118. If you have a question for Cleve, feel free to give us a call here at the station today, or you can text us at 407-250-9144. If you'd like to talk to the Lone Ranger, I can be reached also on that same number at 407-250-9144. If you have an interest in getting pre-approved for financing, we're going to talk about all the benefits there are to using
you're not going to get your house.
You're not going to get anything.
No,
you're not only pre-qualified, but not only pre-approved, but fully approved. Call the Lone Ranger. My team is here. I've got 33 years in the business. You know, Cleve, I celebrated yesterday. Actually today is the 19th. Is that correct?
Yep.
Today is the anniversary of my 33 years in this business.
Wow.
33. And it's my wedding anniversary, and yesterday was my kid's birthday. So 33 years of knowledge in this business, one of the top producers not only in Central Florida, but nationally. I don't tell you that to impress you. I tell you that to impress upon you. Use people that have a track record. Don't use people that have a great commercial and suck you in to their garbage philosophy. Use somebody that gets the job done. Check my reviews out. Check my Zillow reviews. Check my Google reviews. Any of those other reviews.
Where are we at this week, Bruce, on rates and what's going on? The Fed's raising rates.
Fed's raising
what
rates.
Happened to interest
The
rates?
Fed doesn't even need to raise rates. They're already being raised, right?
Yeah.
They're just going up. So it was really interesting. Every single day this week, we had a rate increase. Now, Monday was absolutely horrendous in the bond market. Now, listen, when I tell you rates are going up, they're going up, okay? But I've been telling people long before this started to happen to get your rate locked in. And a lot of people thought, oh, it's going to be okay. These 3% rates are going to last forever. Well, they didn't. They're gone. You will probably be in the fives before you know it. And some people are already in the fives.
Wow.
Already in the fives. The national average, I think, when I looked it up last week, was 4.28%.
Yeah.
So 4.28% for a good credit score borrower, that's about where they were. But then what happened Monday? We lost 97 basis points in one day. Next day, 47. Next day, 57.
Uh-huh.
Okay, it just kept going on and on. And what does that mean to you? Like, what do consumers go, well, I don't know, what does a basis point have to do with me? Well, here's what it is. For every 100 basis points that the bond market deteriorates, it costs you 1 point. So if you're getting
1% of your loan.
1% of your loan. So if you're getting a $600,000 mortgage,
$6,000.
in the morning of Monday, you were at 0 points. By the end of the day, it cost you $6,000 one day. The next day it cost you another half.
Yep.
Next day it cost you another half. So you were 2 points up by the end of the day on Wednesday from what you were when we left the market on Friday.
Well, let's talk about what the big problem I see out there in the market right now. We've still got low inventory, and inventory is less than 2,500 homes. It's been that way for about 4 months now. And what's happening now, I think we got people that want to sell, but they can't because they don't know where they're going to go. They don't want to live with the in-laws. So I either need you to get them fast-tracked to buy without selling, which some people can do, or I can get them a lease back in the house. We sell their
Correct.
house, get them 60 days, and they get to shop for 60 days. And I haven't had anybody, knock on wood, not find a house in that time. But then your offer is not contingent on a home closing. In a normal market, that'd be fine.
Right.
But we're not in a normal market.
We're not in a normal market
And so-
at all.
And this is where, and the prices are still rising, slowly but surely. And
Well, I don't even know if you'd call that slowly. The builders are still raising their prices like $5,000 a month.
yeah, and they're still, but they're going up. But the interest rate, that's a double whammy. If you wait 6 months, I've had those people. I've talked to those people, and that say, "Oh no, I'm waiting. The market's going to come down."
Oh my
It's
gosh.
like, yeah, and
It will,
there's always
but not
one.
when you're alive.
Yeah, I've been through 3 speed ups and slowdowns in my 30 years, and it's funny because I remember people saying, "Oh no, they were total opposite of what actually was happening in the market." I'm in it up to my knees
Well,
every day.
let's put it in perspective, Cleve. So, and believe me, if you have a question about this or you want to look at specific numbers for you, give me a call at 407-250-9144 or webringyouhome.com. But let's talk about specifics. So let's just take your median sales price of about $365 right now, because if we look at the numbers, I pulled up numbers from last week, and your median sales price is $365,990. That was last week. That rose from $305. So we went up $66,000 in 1 year on a $300,000 house. So let's just say you're buying a home for $365 and you're getting a mortgage. Let's just say you're putting down 5%. So you got about a $325 mortgage, right? If the interest rate goes up by 1%, that mortgage payment's going to go up about $300 to $350 by 1%. But if the house goes up $50,000 more dollars, it goes up another $325. So you're going to get the same house in 1 year from now for $700 a month more. Now, if you don't think $700 is a big deal for you, then wait. You're going to do great. You're going to do great. Just keep waiting. It's a really good philosophy. But what happens is people get polarized by this, and they're like, "Oh my God, they're at an all-time high. I don't want to buy now." Oh, you want to buy later? Oh, okay, you're going to buy later, so you want to buy when it's worse. No, you get in now. The problem will be fixed. So we are starting to now. I am seeing a parallel between today and 45 years ago when Carter was in office. And if you look at that, and this is not a political statement. I don't care. I actually liked Carter. I just think he was a crappy president. Right? I think he was a great man. He's just a crappy president. And he also hit some really bad times. So do you know what inflation was at that point?
It's like 15% or something crazy.
14.5%. Okay. So right now we're at 8.5% inflation rate. But do you know what they based that on? They based that on oil at $88 a barrel. So if oil is $120 a barrel, which it was $130 last week, I think it dropped to $120 this week. That would put our actual inflation rate at 14.5%. Same place we were in Carter years.
Well, it's not cheap, but the housing's not going to go down.
It's not going to go down. So I don't care if interest rates are 4.5%. I don't care if they're 5.5%. I think you're going to see a good credit score in the next 3 months at a 5.25% interest rate. I just do. I think it's going to happen. So, but I don't care. Don't let that get in your way. If you're going to make $50,000 a year in equity on your property on a $350,000 house, don't let it get in your way.
Well, funny,
we'll refinance
the average price of a single family home in Central Florida is almost $400.
Yes, I know.
The average, of just a single family home. When you add all the homes together, we're averaging about $370. You add townhomes and condos in that mix.
For me to do mortgages today, Cleve, that are running in the $600,000-700,000 are a day-to-day thing for me. Like, even 5 years ago, we went, "Oh yeah, I got a nice big loan. It's a $600,000 loan. That's a big loan. I must have a super successful guy here." Now it's like every day I'm doing $600,000, $700,000, $800,000, just one after another after another.
Tell everybody about what I see in the offers coming into me. I mean, I'm still getting multiple offers on my listings, and there's a structure to that. That's one thing I have. A lot of agents just get the multiple offers and they go, "Oh my God, we got multiple offers. Let's change the MLS. Let's do this." I set you up from the beginning to get multiple offers. I have a structured bidding time on the house, and that way I get more offers on the home and gives me time to talk to each offer and see how I can help them improve their offer, which is what I want to do for my sellers. So I've got to structure this. I developed this back in 06 and 07, and it works great. So the house is on the market for about 5 days, 4 to 5 business days, and a weekend. And that way it's kind of got time to cook, because a lot of people, the house might, they list it on a Wednesday. They got 4 offers Wednesday night, and they're like, oh, God, we're going to cut offers off tomorrow at noon. Well, what about the 2 doctors, the married couple, they're doctors, and they work.
They couldn't get out.
And they're not off till Friday. So you want to give it a certain amount of time. Now, longer than 6-7 days, that's too long.
In this market, it's too long.
People pull their offers back, and the buyers are impatient.
Well, they're afraid they're not going to get chosen, so they go out and make another offer on another property.
So there's a structure to that, and I've got my market maker program to do that. But I'm still seeing those multiple offers. But they need to be if I don't have a pre-approval from a lender, that offer is really weak, and I ask them, I say, I need something better than this. I need your lender to do better than this, not just, I think I've talked to them. I need to know they've seen W-2s and tax returns, but talk about Fast Track.
Well, we can talk about Fast Track, but there's something over and above just having a pre-approval or a full Fast Track approval. In order for a seller to accept your offer today, you have to position yourself so that you appear to be as close to cash as you can possibly be. Mm-hmm. So if you have a contingency, so my job right now, I'm doing everything I can to remove all contingencies for a client. Now, the biggest contingency that you would find would be they got a house to sell.
Yeah.
Okay. Now, a house to sell and a house to close on are 2 different things.
Yep.
So a house to sell means that you haven't even got your house on the market, or it's on the market and you have no buyers for it. A house to close is, I have a buyer, my house is on the market, I'm under contract, the appraisal's been completed, the home inspection's been completed, and the loan's in underwriting. I'll entertain that deal, right? Because you got a buyer, right? Now we want to make sure that their buyer is well qualified, because we don't know how good their crappy loan officer was. I mean, they could have gone to a bank. The banks say yes for everybody and say no the day before closing. That's what they do. So we want to make sure that we've vetted everything and that we're super clean. What I'm doing with Fast Track is I'm removing all contingencies. So this is actually how I spend my day, finding ways to remove contingencies for borrowers so that you, Cleve, can accept their offers. So what I do, I had a client yesterday moving here from Fort Worth, Texas. She's a pharmaceutical rep. He's a pharmacist. Okay. They're being relocated here. She's got her job relocation. He's working on his. So, but they got a house to sell. They need the money from that house. They got a debt on that house. But here's what I did. I worked that deal. So instead of them needing the equity from the house, they're going to borrow from their 401k, put 5% down. I can qualify them without that existing mortgage.
Yes.
They don't want to put 5% down, but I can qualify it and I can remove all the contingencies. Now you're qualified with 5% down. Yeah. Okay, you're putting PMI. No problem. Now go put your house on the market, sell it. Now we're putting 25% down.
Yeah.
But I can get the seller's attention because I have no contingencies. Now, you don't want to trust these lenders that aren't putting contingencies on your pre-approval. That's malpractice, and I think you should be arrested for that. I honestly do. If you know of a contingency and you deliberately don't put it on your pre-approval, that's malicious to everyone involved, and I think that a loan officer should be held accountable for that. If you want a great loan officer that's going to walk you through that process, and I will increase your odds by 70% by using my services, even if you're not a cash buyer, you call me at 407-250-9144. I'm the loan arranger, Bruce Woodburn, 407-250-9144, or WeBringYouHome.com. If you'd like to talk to Cleve, Cleve and his team are experts in the industry. Don't trust these online companies. They're just finding realtors that have a license that couldn't sell real estate anywhere else, and they're hiring them for cheap. That's what they do, and that's what you get. You get what you pay for, you guys. Call Cleve at 407-352-8118, 407-352-8118, or cleveloveland.com. We will be back in 5 minutes. I want to talk a little bit more about what interest rates are doing and how to position yourself in this market to really be the chosen one, because that's what people are struggling with, Cleve. So I want to talk a little bit more about that. Then I want to talk about Hanover Family Builders. I also want to talk about, I've revised some of my things on my construction perm loans, and I can't wait to share that information with you. We'll be back in 5 minutes with more of the Loveland Report and the Lone Ranger Radio Show. Stay tuned.